Welcome back. Let's get into that market picture now. And Asian stocks stuttered this Thursday, particularly yesterday, but today tried to come back on board. Dealers remain wary, of course, of that release of the Federal Reserve minutes that provided a mixed bag with a speech by its chair at the end of the week. The key point of focus. Now, Donald Trump did provide some fresh hope for the China-US trade talks by saying that a deal will probably be made, and Wall Street ended then with some healthy gains thanks to blockbuster results from retailers that indicated strong consumer demand. But investors in Asia playing it cool ahead of Jerome Powell's address to the Central Bankers Symposium at Jackson Hole, Wyoming today, which will, of course, be scrutinized for an idea of Fed interest rate policy. Now, Tokyo's Nikkei did manage to edge a little bit higher in trade today. That's at 20,628 points. A downward day for the Hang Seng and the Shanghai Composite, unfortunately. Both markets unable to stay a whole lot higher. On the front of the United States, though, the benchmark S&P 500 ended little changed on Thursday as a fall in U.S. jobless rates claims offset data showing a contraction in U.S. manufacturing activity, while investors awaited Federal Reserve Chair Jerome Powell's speech on Friday for clues on the central bank's monetary policy. Now, the Dow Jones Industrial Average rose 0.2% to 26,253 points. The S&P 500 inched lower, while the Nasdaq Composite dropped 0.33%. That's just below 8,000 points. Well, taking a look at how the markets have fared then on the European front, that has certainly been of keen interest as well. Well, turns out to be a much better day as well across the board here, with green all across that board there. The FTSE 100 going up around 0.1% thus far. The DAX and CAC 40 out in Germany and France respectively doing fairly well. On the local front, however, a bit of a mixed bag. The JSE headed down this morning and still down as well in this early afternoon trade, while the industrials have managed to tick high despite a flat day in Hong Kong for the likes of Tencent. So that market picture not necessarily looking too well. Financials headed slightly down. On the resources front, well, those stocks have certainly gone lower of late, even following through from the safe haven trading that we had a while ago, which meant that gold stocks saw some positivity. That seems to be filtering out and bringing down those gold stocks. So they've certainly suffered of late, and that platinum counter also sitting fairly down. While on the commodity front, the actual metal of gold also headed lower and still below that $1,500 an ounce mark. That is, of course, a key level for that metal, but certainly struggling a little bit now as that safe haven trading pulls out. 857 then for platinum, while the oil price is certainly a little bit higher than that, and I apologize for that number. Certainly isn't $36. It is around $60 a barrel. Taking a look then at your currencies, it's 15.18 for a US dollar. So key component here is that it is remaining stable for now. The rand still hovering around 15.18, 15.20 against that US dollar mark, perhaps trading within a band then between 15.15 and 15.30 or so as well. 18.56 for a pound, and the euro will set you back 16 rand and 77 cents. Let's unpack all of this market picture now, and let's get to chat to our market analyst on a Friday, of course, and that is Warwick Lucas, who does join us from Galileo Capital then as we unpack this market picture a whole lot more. Warwick, appreciate the time. Thank you so much for it. A whole lot will certainly be said, but the key component today will be the Fed meeting that's happening out in Jackson Hole, Wyoming.
Yeah, so change of venue for them. I think the market's generally fairly cautious there, not expecting any kind of language outside of this scenario of a mid-cycle tweak that Powell has conveyed. So yeah, going into a bit of a cautious footing after what has frankly been quite a strong market week.
Yeah. Can we actually say that the bull run is perhaps over? Is this perhaps some of the fears that the market may lay out?
Well, we're at quite an interesting juncture. I mean, a lot of noise has been made about the yield curve inversion. The difficulty, though, is, well, is it this different this time? You know, in the past, what has happened is that you've had tight monetary policies pushed up the short-dated, the 2-year kind of lending profile, But what has happened this time around, as opposed to the last 7, is that long rates came down, and that actually could be stimulative.
Okay.
So it's far from a slam dunk that this whole sort of yield curve discussion is necessarily going to end in a train wreck. It's not a given at all.
Yeah. So I suppose then the caution must be to market investors right now is that where exactly do they find the joy in the current market picture, and where exactly would they be looking in a time when it just seems like everything is headed for some sort of bad news at some point?
Okay, so I mean, if one looks at the likes of employment data in the States, well, actually the Bureau of Labour Statistics has just revised downward its view on just how many jobs were created in the last few years by a total of about 500,000, and that was actually in the Economist magazine. But nevertheless, it still leaves an economy that's really very, very fully employed.
Yeah.
Consumer data looking good. Housing pretty neutral, but has scope to improve. But most importantly, the Fed is actually within mandate. It's been well within mandate for many years, so it actually does have scope to possibly cut beyond the 25 basis points, but it may choose not to do so. So there actually is potential positivity there. And after all, where there's so little yield available on the bond markets, the alternative then is risk instruments. So markets could actually surprise by going a lot higher than anyone expects.
So that puts the question then about the local front. Does the South African Reserve Bank have enough room then to cut interest rates? Inflation coming out at 4%. I suppose the biggest issue would certainly be the currency, which still remains above 15 Rand, that push pressure. Is that enough to keep them perhaps unable to change interest rates at their current level?
Well, we probably do, on the face of it, have room to cut, but by the same token, our friends at Eskom have pointed towards the fact that any whiff of growth and the generators start going into the break. So we've also got what you would call a supply side problem, in that any kind of recovery, it doesn't matter whether it's electricity or something else, but the supply side in this economy is also not right. So we've actually got structural issues that need some addressing here. Does the SARB have room to cut? In my opinion, yes, they do. And it's confirmed by the inflation data, because firstly, the inflation data in and of itself says inflation's not a problem, one, but two, that low inflation data is also suggestive that really the economy is not bumping along, which we knew anyway. The economy is not doing well. So we need growth badly.
Yeah, either way, whether Eskom likes it or not, unfortunately, we will need growth. It's perhaps bigger than them. Let's get into some equity news then. Some earnings news having come out today, the likes of Grindrod as well coming out with a set of earnings, Hulamin as well, and even Northam Platinum. Take a pick of the litter. Which one do you want to kick off?
Okay, so I think Northam, a very heartwarming set of numbers there. Good operating performance, good cost containment, great safety record. Clearly they've been helped by both the currency and the basket of minerals there, but clearly an excellent performance coming through that mine is on the right track, obviously. Grindrod, a different picture there, although positive as well. Very much a turnaround story there. They unbundled the shipping business, which happened last year, and they're now selling or discontinuing, as the accountants call it, what are effectively trading businesses in fuel and agriculture, and what's going to be left behind is a core logistics and ports business. Again, looking like they're recovering off a very low base there. So I'm happy with the picture that I'm seeing there. So there's one or two good news stories there. Not enough for them. We definitely want to see more good news stories coming through for the sake of the tax take and investors, but some positivity there.
All right. Very quickly as well, you had Hulamin, aluminium supplier there, coming out with also very, very quickly with earnings. But I wanted to chat to you very quickly about the Rand picture. Should we be worried that it's going to stay above these levels, 15 Rand odd there and thereabouts, or can we expect some strengthening at the very least, even if it is sort of our own doing at some point?
Well, I think it's really going to boil down to where commodities go, and I think we're going to keep watching that where those trade talks go, because frankly we're on the tail of the Chinese dog, and that's an export product economy, a manufacturing economy. We need to see some recovery there for offtake on commodities to help us bump along. Otherwise, I'm afraid the rand has to act as a shock absorber.
Yeah. Warwick, appreciate the time. Thank you so much for chatting to us this Friday afternoon. Warwick Lucas there from Galileo Capital, helping us unpack that market picture a whole lot more.